Is this on? It is on. Hello.
Well, good morning, everyone. It's very nice to see you. Thanks to Elisa and the whole team at CryptoCompare for having us. I'm Josh Oliver. I cover crypto and investing at the Financial Times. Delighted to be here with another Oliver of a sort. Do you want to just start with introduction, a little bit about yourself and about the company?
Sure. Hi. It's great that I actually know about half of you, but I will intro for the other half that I don't know. My name is Oliver von Landsberg-Sadie. I started BCB Group in 2017, initially as a kind of a broker, but quickly realized that actually the really interesting problem in this space is banking. So BCB does that. We provide payments rails for big crypto companies who need to service their clients. And my part as a founder has generally been wearing the geek hat, original engineer from a kind of quantity background in banks, paired up with my co-founder who is a regs expert, a lawyer, and that's the origin story in a nutshell.
Great. And I mean, we're talking about crypto banking today. I think the answer to this question will be probably painfully familiar to a lot of people in the room, but tell us about what are the pain points between crypto and the banking sector these days, and how has that picture changed in the last year or so as crypto has grown so enormously?
I think anybody who's been in the crypto industry long enough has probably been unbanked at one point. And we were in our former iteration as a broker, and that's really the core of it. Is how do you just get a credible, large balance sheet institution to provide a basic bank account where you can pay your staff or settle trades if you're a market participant. It's such a simple piece of infrastructure that's such a given in most other sectors. And yeah, I think that's the chief pain point that we've really dedicated ourselves to solve wholesale and in a super focused way on the crypto industry. There are a bunch of other players who are, have leaned in from other industries and want to provide that service. But I think in order to solve the pain points in this market in a way that really matters end to end for the customer experience is to get it from a crypto mindset. And to see that the pain point evolves not just from having a basic bank account, but actually in crypto land you can send value super quickly, super cheaply, borderlessly. Why can't we have that experience in the fiat world? So by having that basic building block, the bank account, we've then built another layer on top of that, which kind of takes it above that bank layer to layer 2 fiat protocol, call it, for lack of a better description, Blink. And then that solves an evolution of that pain point, which is, okay, you got the bank account, but now we actually need to get this market moving quickly. So that enter Blink, dozen or more currencies, instant settlement. Yeah, it's. I think those are the core pain points. But actually, getting regulators comfortable with the industry as a whole, getting regulators educated about what it is we're actually trying to solve for, and being comfortable that we're not pushing laundered money through, that we're not pushing criminal money of any kind through. That pain point is also one that's kind of new to this, and that we're aggressively solving for as well.
Yeah, I mean, obviously, the crux of your success is going to be the regulatory piece. These days in crypto, I think everybody says they are a pro-regulation company. They want to work with regulators. That's a talking point that we hear everywhere. So, what is the way of doing it where you're going to be absolutely sure that you're going to have regulators on side in an environment where things are changing every day? We have news breaking about regulation in the UK, sort of as we speak.
Lesson 1 was, don't hide what you're doing. So actually, anecdote, we started the company in 2017. We couldn't get bank accounts under the original entity name, which was Bitcoin Personal Brokerage, which we then contracted to Bitcoin Bro. That's another anecdote. But with the word Bitcoin in the company name, all the banks were like, nope. And so we kind of had a super vague name. It was Consultancy Software Limited. And that lasted a certain period, but then it was clear that actually, you just need to own it. You just need to wear it. We are crypto. We love crypto. Crypto is legit. It's not this mythical space where crime happens in the underworld. Most crime happens in dollars, in sovereign issued money, and so getting regulators on side so we can do what we do at scale. It's utter transparency, regular dialogue, feeding into that learning cycle of what's the taxonomy. How do we control today for AML? So the FCA has obviously got this AML register. Tomorrow, how do we control for market efficiency and market controls? How do we control for consumer protection in general? How do we control for money raising? And even though the crypto purist's view is a much more anarchic, world in which is vocally anti-regulation, and I'm not at that end of the spectrum, the only way we're going to get traction and momentum for this financial revolution is being tight and honest and collaborative with regulators, with the FCA here, with FINMA in Switzerland, the SEC and the various bodies in the US, and that's happening. And the progress is slow, but there is progress.
As you look across those three markets that you mentioned, the places where you have experience, what are the differences that you're observing in how your conversations with regulators go, what their attitude and preconceptions are, and the kind of secrets to...
Is that me? Sorry.
I think that's you.
I think it is about a certain level of commerciality. I think the Swiss are in tune enough with the commerciality of the opportunity to be really progressive and really specific about regulation, and they've introduced a lot of stuff ahead of many other jurisdictions. I think the FCA's commerciality was that I don't think the FCA anticipated just how big the business is in the UK, and now we've got this crypto asset situation where a bunch of businesses are not going to make it in time and are having to find different jurisdictions. So it's not a matter of winning or a matter of understanding. It's a matter of the initial expectation. The FCA are like, holy shit, this is way bigger than we thought it would be in the UK. And and that cuts both ways, as many people in this room are finding now. The US commerciality, I mean, they are massively on the front foot. They are looking at, and it's not always the right outcomes. It's not always the outcomes that cryptoland likes, but there's motion, there's activity, there's policy making, there's a bunch of licenses, there's state-based regulation, there's federal regulation. It's a much more commercial. So yeah, I think too many words, but I think the compressed version of that is what is the jurisdiction's view of the commerciality and the legitimacy of the industry, and where they land on that spectrum really is the signal for their level of progress in the space. And actually, it's a signal of where businesses are most likely to thrive. Is anybody from the FCA here? I wanted to thrive here.
Now,
yeah, it's harder here now.
Can folks hear me better with this? Yeah, okay, good. This is my stand-up comedy mic now. So regulation, sure, it's a crypto conference. Let's talk about tech. You are a geek at heart, as you've admitted. Part of building a crypto bank has got to be bringing the benefits of technology to the world of banking. Where can you push the envelope in terms of developing the technology at BCB?
So unlike a bunch of crypto native projects who get a bit of a blank slate and are unhindered by hard connections to the kind of TradFi infrastructure, a DeFi protocol can approach a problem in a wholly original way and get it out there quickly. But the tech challenges in building a bank for this space, or a payments company, or anything which has a hard interface to that TradFi infrastructure, is you're dealing with a super mixed bag of capability, speed, risk appetite. And so to reflect how that tech challenge manifests in our go-to-market model, and we've evolved from the go-to-market model, and I'll come on to that in a sec. Our go-to-market model is have some super sexy tech, a great user experience, and get the regulatory licensing layer on top of that by partnering with a network of crypto-friendly banking as a service providers. That's the model in a nutshell, up to quite recently. Each of those banking suppliers has their own tech stack at various stages of complexity and sophistication. There's a bunch of manual stuff that has to happen in the back because you're dealing with some old institutions and some new. And it's about how do we wrap all of that in a smart way that provides the UX that a crypto native is expecting. A crypto native expects an API endpoint with 5 millisecond latency that's going to be able to get your balance, make a payment, do everything seamlessly and flawlessly. How do you provide something that even remotely simulates that UX when you're dealing with this mixed bag of what the fuck?
So how do you?
I'll give you an example, and you can kind of generalize from that. V1 of the BCB banking console interfaced with 3 banks, and just to be nice, I'm not going to mention the one which we needed this override for. But when you hit pay on the screen from your account, it dropped a little Slack message to our internal Slack, which an operator was monitoring, and they log into the 1990s banking console, and they look up the account, and they make the payment from A to B, and that was fine for the first few months. The user experience was, okay, fine, I've made a euro payment, it'll probably go out sometime today. As far as they're concerned, they've hit the button, it's gone from A to B, and it's done. So that's a kind of a specific example of thinking about it not just from a pure tech point of view, which you've got the luxury of in DeFi space, but also from a process point of view, a governance point of view. How do we do this and not lose money or lose clients' money? How do we do this and make sure everything is properly safeguarded and compliant with the regulators we've been buttering up? And it boils down to that blend of people, process, and platform that is a slightly different challenge. That helps.
Right. So we were talking about building a bank, but you guys are also buying a bank. So is this just about buying a regulatory status, or does this fit into kind of broader business model moves? And tell people a little bit about the deal that I'm referring to.
Sure. So I referred to our go-to-market model, which was be a payments institution, partner up with a bunch of crypto-friendly supply banks, and just solve the problem that the market needs solving, which is have an account, move money from A to B in a regulatory-friendly way that, with all the transaction monitoring and all the bells and whistles that makes it a safe and robust and sustainable thing. But that model kind of hit a scaling limit because of this mixed bag of banking providers, all at different paces, all at different cost models. You hit a barrier. So for us, it was quite a simple decision. Actually, we need to go deep where we have traction. Our biggest traction is in euros, and it was the obvious move. We need to own that bottom part of the layer. We own the payments layer, but actually to be really effective and provide the UX which our clients deserve, we have to own the bank. So yeah, the regulatory status is a big one, obviously. Credibility, ability to do a bunch of things that we can't do as a payments institution or as an e-money institution, and being able to set up correspondent networks with other crypto-friendly banks in the world, which is going on. So buying Sutal Bank and bringing them into BCB Group, a super forward-thinking Hamburg-based 100-year-old bank, but like nobody there's actually 100-year-old, which is you'd be forgiven for thinking so in some spaces. But they're super progressive. They've got a great progressive tech-first model that was really sympathetic to ours and gets us to that bottom layer. That's the playbook. We are looking how do we replicate that success in other markets, and I mean ultimately it's just to serve my mission, which is to get this crypto industry banked and connected, let it grow, give it the platform to grow. So that Sutal Bank acquisition was really strategic, really valuable, and will hopefully be one of more that makes this industry tick along a little better.
Right now, if I were just to put my crypto purist hat on for a second, I think if we go back to the original vision of crypto, you might say that a crypto bank is a contradiction in terms, right? The point was to get rid of the banks. So how do you see that contradiction, and what do you see as the future of crypto banking?
So there's a very cool business model that Web 2 gave us, the Web 2 model in which people self-publish and the kind of value moves from office towers to bedroom streamers and bedroom coders, right? Web 3, which is kind of really tightly associated with this crypto space, the core ethos there is decentralization, disintermediation of the, collapsing that chain of middlemen. What counts is not the thing you've built. What counts is not what the thing you've built can do. What counts is the network you've built can do. I'm going to rephrase that because that came out wrong. What counts is not what the thing you've built can do. What counts is what the network you've built can do. And so the template for success in this value revolution is this, I think. The only future-proof placeholder is one in which the business model is prepared to disintermediate itself. The most successful example, I think, is software companies, where we've seen that there's actually much more power in getting the network of global developers who earn tokens based on good code instead of the kind of prior model of highly centralized armies of engineers. So applying that template, the only future-proof software companies are those willing to disintermediate themselves. If we can apply that template to money systems, you land with Bitcoin. So the only future-proof money systems are those willing to disintermediate themselves. There is no boss of Bitcoin. If you lose your Bitcoin, you can't call the manager, sorry. And so, actually, do you mind if I try something? I know half of you, so I kind of feel safe in trying this. I'm going to ask you to join me, please. Sounds super cheesy, but you'll either join me because you feel sorry for me and you don't want me to die on stage, or you'll join me because actually the message makes sense. And it's this. The template is this. The only future-proof placeholder is one willing to disintermediate itself. And the word I want to throw in there is banks. So again, join me if you feel sorry for me, so that I don't die on stage, or because you actually believe the message. And say with me, the only future-proof. He's nice.
Come on, folks.
Let's start again. The only future-proof banks are those who are willing to disintermediate themselves. I think so, right?
Does anyone else feel like they're at church?
Yeah. I knew it would kind of come out like that, but I really believe it, and we're only going to get there if we're willing to apply that template to a bunch of other businesses. This is a value revolution, and if you're savvy to that now, you generate immense wealth for yourself, for your company, for the industry, in a much more distributed way. It is, and it's not a zero-sum game. We all gain. That informs my view when it comes to competition and partnership. It's be prepared to step out, because what's more valuable is the network. It's not the core.
Well, Oliver, thank you for taking us to Crypto Church. I hope you guys enjoy the rest of your day. It's been great. It's been great talking to you.
Thank you, Josh.
Okay, next up, we have a coffee and refreshments break. So you've got time to go and chat amongst yourselves and be back in about 20 minutes. We'll announce it on the loudspeaker.